Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it is Thursday already. It was both a long week and a short week. I dealt with a lot of production issues at work this week. And trading, though, it's kind of felt like it's been all over the place and it's gone through pretty quickly. We got some initial jobless claims coming up here really quick, so I got to come in and just take a quick peek here at what the overnight action was in ZN. I know that it was down, okay, but did it completely retrace the up action that we had yesterday? Maybe a little bit. We keep seeing this pattern that it's like, maybe there's buying in the US session, but then in the overnight session, the Europeans are just always selling it. So, yes, kind of a similar sort of a thing where it's like, well, they're a little bit higher, but it's kind of measured. Oil, another leg down yesterday. Gold and silver not doing so well either. Copper, the dollar. Let's see here. Where are we at? The dollar's at 105.5. Bitcoin did take a little leg higher. So the headline that I'm hearing in Bitcoin now is that the SEC is in negotiations with Grayscale. That's the headline or the rumor. It seems like that whales are buying. But I'm still deeply skeptical about an ETF getting approved. So. Okay. So we got everything set here. Cool. All right. And after the jobless claims, we do have Powell speaking, but much, much later today. So I don't know if that will be a huge driver of the action here this morning. By the way, we're looking for 218 versus a previous reading of 217 on jobless claims. Liquidity here in the macros doesn't look so good. Okay, and it is 217, slightly lower than the forecast, but that's all the news we have today, by the way, so curious to see how they react to this. I don't think that I want to take a trade, though. Okay, so, to review, we just had initial jobless claims, came in slightly under expectation. We have Bostic and Barkin speaking in about an hour. And then Barkin is speaking, I guess. And then we have a 30-year bond auction later today, so... Now, yesterday, when we moved up, a lot of that movement was on the long end of the curve. Now, we kind of discussed it in Discord, and I think one of the better explanations was that China growth was weak, and so that's why yields were declining. But, I mean, it looks like they're giving up all those gains here today. And we're getting a little bit of some aggressive selling, but it's only back to 108 even, so let's see. There's usually a decent amount of liquidity around an even number like that, so let's see what they do here. We are getting enough activity after this news for me to think that we could get some interesting action here today in the treasuries, although I think I'm going to wait a little bit to be sure that it's not just knee-jerk reactions and noise from the news, and that there's actually some real large orders at play out there. I'm still on the lookout for some possible selling, though. I mean, if it's central bank speakers being dovish, well, I don't know. We got some time for that, at least. The auction yesterday was not particularly good, but the amount of volatility that we had relative to, you know, how good or bad the auction was like way crazy. Like the kind of activity that we had was the kind of activity that you only see when there's like a really bad auction. So there's some other things going on under the surface, and this has been my struggle with this market, is that the amount of time that I feel like I am not the informed player is just too high in this market. It's having a very difficult time finding that informational edge here. Tiger for Prez first again. Good morning, Dom Dom, Octavius, Jiwi. Nah. So let's oh, there you are, Dan. Good morning. Let's browse around, see if there's any interesting stories that I didn't see when I woke up this morning. Zero Hedge is pushing a story about Vivek's bombastic comments at the Republican debate last night. We can talk about that later if you guys would like. Oh no, Steve Wozniak hospitalized in Mexico City. That's no good. Hey, Amir, how you doing? RS warns over tax withholding, announces higher retirement contribution limits. I think that when the taxes come in this year, there's going to be a lot of people that are going to be, let's say, upset. Yeah, that must be, that thing about Woz, that must be like new. CNN cited an unnamed source who said Wozniak fainted before he was scheduled to present between 4:20 and 5:20 Wednesday. And the Mexican media reports that they're getting suggests that he had a stroke, whereas TMZ speculates the illness could be a less severe case of vertigo. Oh, vertigo is the worst. TMZ spoke with a person with direct knowledge and said Woz told his wife he was feeling strange at the conference. He then started showing symptoms that alarmed his wife, who said he needed to go to the hospital. He is still in the hospital, but remains stable and is receiving top-notch medical care. Okay, so they went to 108 and bounced. So am I going to do are they going to do the it goes up all day and Seth ignores it again? To be honest with you, I don't think I have a super strong reason to be bullish or bearish about this specific day. I think kind of longer term, I think that 4.5 is too low, is too big of a clawback, and that they're going to need to have another test of higher rates at some point. But for now, it seems like the day trading that they've kind of been favoring long, that like you got CTAs and so forth going along. We're also kind of getting, well, okay, yesterday's low was 107.26 half, and its high was 15. Wait, am I reading that right? 108.15. Yeah, okay. This is way up there. We're quite a bit lower at the moment, but it's like I'm kind of seeing maybe that we're getting an outside bar. So like, I don't know. We are getting that last move up was a reasonably significant impulse. Coming back over here to the chart with the cumulative delta, we do see some buying pretty consistent since that strong selling kind of close just before the open, essentially. So you can see since the open they've been buying. Does autocorrelation have a stronger effect in certain, or rather the autocorrelation of order signs? I've never seen any research on that, but I would be willing to bet that it is a stronger effect in the treasuries than it is in the S&P 500. Futures, at least. Salim wants me to rant about Bitcoin this morning. It seems to me like Bitcoin may be at the beginning of another bull run, but it seems to be based on something very speculative that I can't really say. Because again, like the report that I've heard is that the SEC is in, quote, negotiations with Grayscale. So does that mean that they want certain changes to Grayscale in order to make it happen? Is the SEC about to like give in? Because they've denied a lot of ETFs, and like the reasons that they've given are things that the individual ETF don't really have any control over. So they're basically saying like the Bitcoin market is manipulated and unsafe and this and that. So I'm still of the mind that the SEC is very unlikely to approve an ETF, but that is the story that's going out there. And when you look at the price action in Bitcoin over the last week or two, there definitely appears to be some buying, and it's not just Michael Saylor this time, because we're not getting any kind of news from him. So, of course, if another report comes out that says that the SEC is rejecting Grayscale, then of course the whole thing would collapse, right? I have not heard of that. I haven't necessarily been a huge Ray Dalio. He was the guy that wrote is he the guy that wrote the book about the changing world order or something like that? It's a religion inside Ray Dalio's hedge fund. The changing world order, that's what it is. The changing world order. I think that the stuff that he says about the changing world order is all speculation and likely BS. And Ray Dalio, his whole career has basically been about predicting that something bad will happen with the dollar or the decline of the United States and so forth. And then like being right and not making any money out of it because the world didn't actually collapse. It's like, well, this one thing will happen and then that will trigger the collapse, and he's all positioned for it and everything, and then like the thing happens and like that's the bottom, so he doesn't make any money. Like that happened when basically the Mexican peso collapsed. So I kind of take what he says about like what's going on in the world and so forth with a grain of salt. He's also the one that has like those principles for success. That sounds like reasonably decent ideas. So, I don't know. It kind of goes back to one of the main themes that we have here on the channel is you can't just go in and look at any one person and be like, I'm just going to follow them. You know, I'm going to base my whole life off of them. We have these mirror neurons in our frontal cortex, and that's kind of how we like to build models in our head, is we like to look at this other person and then we try and mirror the neurons that they have and create the model that we think they have in their head, right? But the market is a competitive game. All of the easy questions have been resolved. You have to discover new things, and so just trying to copy somebody else, you don't know what they have that was good and what they have that was bad. That's why everything that I say, I'm trying to back it up with empirical evidence or confirmed news reports or whatever the deal is. I don't want you to just trust what I'm saying, because I think that's ultimately not helpful for the thing that we're doing. You know, if it was like, how should you raise your kids? Well, yeah, you should definitely utilize research. But I also think that you're going to take a lot of that from what your parents did or people that you admire. Maybe you like there was this person on TV, the nanny person on TV. Of course, I always be careful about people on TV or like super popular people on social media and following them. But, you know, because the research is just not detailed enough for you to really be practical of doing something, you know? But you got to be careful just following one guy. Any time that you start to idolize somebody as a hero, you're gonna eventually be disappointed. No, isn't that the Super Nanny? Like, have you ever seen that? They've done a couple of episodes like this on South Park. There's one where there's the dog guy, right? Where and that works, and that actually helps his mother control Cartman, right? Except for that guy is like a complete scam, and I would not recommend his methods of dog training whatsoever. And then there's like this super nanny that she has a TV show where it's like, these kids are totally out of control and I'm going to teach them some respect, yada yada, right? And like Cartman defeated her. So okay, but I want to see this study. Hello, a guy man. Well, here's one that's on the New York Times. I'm not going to get through the paywall. Let's search for coin flip in this article. Dublin cites research done by Bridgewater Associates to find out whether Dalio's investment ideas were any more successful than average. They found that he was basically 50-50. His insights were no more likely to succeed than a coin flip. When presented with the findings, the book says Mr. Dalio picked up the piece of paper, crumpled it into a ball, and tossed it. That doesn't seem like someone who is interested in stress testing his thinking or hearing from someone who might push back on his decisions. Instead, the book paints a picture of a person who isn't interested in anyone else's opinion or ideas, and certainly isn't interested in being told he is wrong. Yep, doesn't surprise me. The book is a pretty devastating takedown of both Dalio and the hedge fund he built. I don't think the critique is not unique to him. That's why it's such an important lesson for every leader. The degree to which you believe you have all the right answers directly correlates to the likelihood that you will be a poor leader. So you know what the thing that super bothers me is that I think that in some respects I am a really, really great leader, and in some respects I am not a very, very great leader, right? So I think that I tend to have the ability to see what my people are doing and know what will help them the most and enable them to be the most successful. And I think that that's the thing that's always like my biggest focus is like, what can I say right now that will be the most useful to you, right? But then there's this other side, which is like all of the clerical organizational sides of things. I'm not very good at that, right? Like any other person doing this would stay laser focused on getting as many people to buy our wonderful NinjaTrader 8 indicator suite, okay? And on its own, it's not necessarily going to make you profitable, but it includes some pretty important tools that most retail traders lack, and I just don't see how people trade without them, right? I should talk about that more. I don't. I forget about it, right? And whatever the strategy is or whatever we're doing, you know, I will forget the higher level objective, and just, you know, it's kind of like whatever you're feeling at the moment. Those are ADHD traits, right? But so I know that I'm not perfect at that, right? And I know that I don't have all of the answers about the market. We've struggled in October. But every time that I get a chance to speak, especially outside of the stream, like on Reddit or whatever the deal is, to speak about these things about the market and what's going on, I'm running into people that clearly have zero clue what they're talking about. And it is so frustrating that it's like, I know that there's some other stuff that would help me right now, and I can't find it because all of the people that I'm talking to are idiots. All of the smart people, they're at the institutions, and I can't talk to them. It's so frustrating, man. Especially freaking Reddit. Every time I'll go and I'll say something on Reddit, I'll get some idiot price action trader that's been profitable for a month and thinks they know everything. Ugh. And they're always so arrogant about it. And then I start saying things, you know, and the stuff that they say back clearly shows me that they're not educated on these matters. Like, I asked this one guy the other day, like, okay, have you read Fooled by Randomness? And he said that he has. Well, does that just call us all? That's why I said mostly outside of the stream, right? I do get some people that push back on us here in the stream, but I kind of feel like it's on the margins and that we're not finding like the information that we need here on the stream. But that's because I'm the limitation there, right? Anyways, I digress. This guy says he read the book, and so then I start talking about things with the assumption that like he's read the book, and it very clearly shows that he hadn't read the book. That, you know, he's like, well, I think the big mistake that people make is that they're not picky enough, and you know, like my strategy only takes like 30 to 50 trades a year or something like that. And I'm like, oh, okay, so you don't have 5 years worth of trading data. You didn't actually really backtest it empirically. So you have absolutely no empirical evidence that your strategy works. And you claim to understand the fat-tailed nature of the markets, that you read that book. But what you're doing clearly shows that you didn't, because you obviously don't have enough data to back up the claim that you're making. And it just, it grates on me so much. I need to just stop commenting on the freaking day trading subreddit, because every time that I do, I just run into idiots. And like, nobody else reads these. Like, if you go in, it's like he comments, you comment, he comments. and they all only have one upvote, which basically means that nobody upvoted or downvoted. Like, probably nobody is even reading the conversation. It's a day later, nobody revisits a thread, right? So I'm just arguing with the one person. It's pointless. They still do it. Like the ICT cult, most won't even consider an alternative. Well, the issue is that once a trader has experienced even a small amount of success, they immediately think that they're king, right? Like this is, I think, one of the biggest problems. So I always say the worst thing that can happen to you in trading is you start trading and you immediately have success, okay? Because when you make tens of thousands of dollars, okay, if you're trading and you have a trade that makes tens of thousands of dollars, or you build the account up that your profit is in the 5 figures, okay, it's just the way that like your brain chemistry works, right? Because the whole thing with like how the human brain evolved, okay, is that we evolved to withstand famine, essentially. Like, that's the biggest bottleneck in our evolutionary history, was there was famines and some people survived and some people didn't. And so, for instance, people that are very sensitive to, well, humans in general are very sensitive to the risk of loss. We don't want to lose, because that was, those were the people that died in the famine, was the people that didn't care about that. So our brains have evolved to care more about losing than we do about winning, for instance. But then one of the other things is when you do get the resources, especially if you're a man, you get the resources, and then it's like, yep, I'm king of the world. I'm going to go and spread my seed everywhere, etc., etc., etc. That's what happens when you've had that success, okay? And so your evolutionary history is unable to discriminate between, like, I've really found something that works, and this is just randomness and it may only be temporary. So when a trader comes in and they have a little bit of success, that it builds the ego like it is a biological thing, and everybody falls for it unless they've been specifically taught, unless they're like watching this stream or whatever the deal is, and they understand this tendency in people. They will immediately think that they're king of the world. And just like this article here was saying about Ray Dalio, right? You're the leader. You don't care what anybody else says then. So at that point, it is literally impossible to prove them wrong. The only thing that has even a smidgen of a chance of bringing them back to reality is blowing the account. And frankly, even after they blow the account, a lot of these people still think that they're gods. They just think, well, I made this one mistake, but I'm still right about everything. And then they blow the account over and over. And they'll even do the stuff like they'll start a trading course and become, pretend to be the big leader and everything, and just, not point out when they blow the account or how many times they've done it. Super, super wild. Well, I can't imagine a world in which all this nonsense matters. Well, first of all, I don't think it's nonsense. And second of all, we're trading in 8-tick range, so does that really matter? I don't. You're making a questionable assertion that there's actually something about this market that is interesting and that we should be paying attention to. You might be right. Immediately after the news, there was a decent amount of activity. Things still kind of look positioned that maybe we'll do something, but like we came down, up, down, and we're up again. That's pretty rangy. Clearly you missed the point. Like, what was the point? There was 2 points. Point number 1 was you've got to be really careful about letting your success in trading go to your head and prevent you from continuing to progress. That you don't want to let yourself be fooled by randomness. And problem number 2 was that it is very difficult for us where we're at with the things that we understand about the market to find the other pieces of information that we need that could potentially give us an edge in this environment. And so the question is, where are we going to find that information, right? Because the best that I can do is talk to a lot of people, read a lot of information, look at studies, and use the skills that I have to do my own research. But what I got right now is just not really showing a clear direction. We're in too unusual of a circumstance for me to really know what the move is right now. I don't think that you say we'll never be able to get the news fast enough, and even if we do, interpreting it will be a challenge. So normally we can make really, really great trades off of the news. Okay. Earlier this year, we made some really great trades off of news and things like that. The problem is this specific environment where we're basically at the end of the interest rate cycle. But then if the Federal Reserve says that we're at the end of the interest rate cycle, and interest rates will decline too much, and that will create the inflation again, and then it really won't be the end of the interest rate cycle. So we're in this contradictory situation where it's like interest rates are both too high and too low. And where they're going to go on a day-to-day basis, I almost kind of feels like is just down to people's whims sometimes. But, you might be right about that because, this week I've made some pretty good reads. It's just that there was hardly anything in them, right? Like for me trading the micros, I'm not even getting my 10 ticks. So if I had just said I'm going to take 8 ticks, I would have been doing great this week, right? So it may just be that we really, really got to bring in our expectations and really go for like range bound trades. I think it would be a lot. I feel that kind of trading is really hard to do here in the micros, but we could maybe pull off in the 10-year, because in the 10-year, if I even get 1 tick, if I'm just going for a 1 tick trade and I got 1-to-1 risk reward and I make the tick, I'm happy with that, right? But look, and this is the thing, because we were having a little bit of discussion back and forth with Luke about because he asked a question yesterday about Gary Norton, because we did an interview with him and he has a course, and I really like what he has in his Yellow Jacket course because it feels so regulatory to me. It's kind of like, man, if I was going to make a small little test that everybody had to pass before you could trade futures, it would be that. And I really like that. So I think that everybody should take that. If you're a beginner, go and take that Yellow Jacket course that he has that's free. Okay. But I haven't taken his larger course. And so the question always is what I think about it and everything. And I think the problem is that you're not asking quite the question that I want to be asked, right? Because I think that the real question here is, will X course give me an edge? No course will ever give you an edge. You're talking about information that is generally out there in the public. If there may be, I suppose if it's like super exclusive or something like that, but generally speaking, it's not going to give you an edge. And when we're talking about Gary Norton, we're talking about stuff that it was, basically from like the early 90s, before all of this algorithmic trading took over. So I think it's really valuable information that needs to get passed on. But is it going to give you an edge? Probably not. But it could be a good base. It could be a good platform to base your knowledge on and continue your study of the market. And then you find something that does give you an edge. that you wouldn't have found without that base knowledge, and so on and so forth, right? And that's kind of the thing that we have to look for in our position, okay? If you want to really just knock it out of the park, you probably should do options, right? But I think that what attracts most of you guys to futures, what attracts me to futures, is you want to come in and you want to be really involved in the market and just have consistent results, essentially. And, the amount of edge that we can actually get on a consistent basis as retail traders is super, super small, right? So I talk about you want to be the sniper, when you have the informational edge and take advantage of it. And when you don't have the informational edge, stay out and be the sniper. That means that your results are going to be a little inconsistent. It might be that there's one time a year where you really, really have an edge and you push it, and that's when you make all of your money, right? And what we really need to do is we need to be vigilant, coming in and looking, because there could be an opportunity out there. There could be a piece of information that we end up finding that ends up really, because it could just be one trade does it all for you. You might just get the one trade and you make so much money, and that's all, and that's what makes you successful, and that's all you ever needed, right? Because it's fat tails. It's fat tails. One trade can make you, okay? It could be a new market opens up. It could be some new innovation in software or whatever it is, right? These people that were in hedge funds and made mondo amounts of money, they were always doing something innovative that changed the game. Okay, all these guys in the 2000s that made a ton of money, retail, that I think all retail traders are kind of thinking about when they're trying to model, right? It was because they were at the forefront of the move to electronic trading. That was right. That's what really made them was they were at the forefront of that, right? And so you just got to come and wait for the change, and if you have a really solid understanding of the market and you're informed and you know what's going on, then when those things happen, you have a better chance of seeing it and being one of those first people to get on board and take advantage of it, right? So play the long game. But and there are stuff in courses that might help prepare you and create that base, but there is, in my opinion, there is no course out there that is going to give you an edge. Okay. How to start to learn from you. So I have a playlist on my YouTube page that says start here, and that has the basic information about platforms and why I use the platforms that I do and what you kind of got to do to get set up. And then I have an order flow video series that's about 6 videos long that goes, it explains what the DOM is, what you're looking at, and kind of what your approach should be in studying the DOM. And then I go into the stylized behaviors of order flow, the things that we know about what the market really does for sure, that you can kind of use to help you make better decisions and pick better spots. And then there is also, if you go to speculators.com/strategy.html, you put your email address in there and it will send you a strategy PDF that kind of goes into what you had just watched with the order flow video series in a little bit more detail, and goes a little bit more into how those things can give you an edge and help you pick better spots. Okay. And then once you kind of understand that framework, then I would come and just watch the stream every day, participate in Discord with us in analyzing the market and saying, here are the things that I see going on. Seems like that there's a buy flow here. Maybe that's due to this force or that force. And that's what we do. And as you do that, come in every day and do that, you're going to learn how to predict future orders, right? So ultimately, if we're going to, if there's going to be an extra edge, because I'm kind of sitting here saying, I feel like I need a little bit more edge here in this market. I don't have enough edge in this market. I don't know how to get myself to that point, right? Well, that edge is going to come in the form of something that helps us predict future orders, right? That's what we want to look. Yeah. Can price action? Here's the problem. Let's go down this rabbit hole. Wait for a large number of trades with the setup trade against them when they are stopped at a huge down run. Okay, so the problem with price action in general, I think that there's this assumption behind the price action in general that is flawed. It's the assumption behind all technical analysis, and that is that dumb money will always behave the same way, basically. Or let's not say that they always behave the same way, but they have a tendency to behave in a certain way. The reality is that dumb money is incredibly random. Dumb money is incredibly random. That's why the strategy that the industry has created to take advantage of dumb money is market making largely assumes that all of this flow is noise and they're making money off of the noise, right? So if you really do a detailed study of these price action setups, they're a little bit difficult to backtest, or let's not say difficult, but the tools that come with your platforms aren't very good at backtesting price action setups, because most price action setups are based off of applying Dow theory to intraday timeframes, right? You know what I mean? Like if I come over here to this chart right here, okay, I don't know if you can see it very well, but do you see how I have these little lines that go from, swing to swing, essentially? And so a lot of price action setups are basically like, okay, we moved down and then up, and now this is a higher low, ergo, next time it comes back, I want to get long from here, right? That's basically what most price action setups tell you to do. And how do you backtest that? Well, you kind of have to, I can see on the chart, I think that it's very easy to show everybody on the chart that, there's this kind of little noise, but then there's these bigger highs and lows, and you can see them very clearly that there's one here and there's one here. But look, I have an indicator on here. So actually there is a way to look at those, and NinjaTrader has an indicator called zigzag. Now, zigzag has one problem, and that is that it redraws. Like right now, if we were to tick down, it would start drawing a node there at 108.003, but then if it immediately came back, it would redraw it. Okay, so you can't utilize the most recent at this time this pivot right here. You can't use that pivot, but you can use this pivot, right? So if all of your logic is based off of this to this to this or whatever the deal is, right? That's okay to backtest. And you can come in and you can say, okay, what was the price of this? This is index 0, this is 1, 2, 3, etc. And now you can do all of those comparisons. If we generated higher high or lower low or whatever the deal is, and then go long or go short. So you can actually backtest price action, okay? And I show how to do that in the videos where I go at. Well, I show how to do that in my video about smart money concepts. I have a download that's linked in the Discord. And in that one, I use that. So you can use that strategy. You can use that to backtest your own price action setups, okay? And just like with everything else in technical analysis, once you get enough data in there to really do a statistically valid backtest, you'll find that there's no efficacy to these price action strategies whatsoever. They're theories. They're pretty decent theories. maybe there's something to them, but these setups do not provide edge. Because dumb money is actually really just incredibly random. Want your I don't really post anything on Instagram. You think that Disney earnings were BS? I didn't really look into that too much. I heard that they outperformed, and I was kind of like, really? That whole thing is, so it wouldn't get me to invest in Disney, because what I see is a company that's faltering, and all of the reasons that they're faltering, they are not actually coming in and fixing them. Like, should I rant about this? At the end of the day, the problem is that Disney was a company that made movies for families, and I don't really want my family watching their content anymore. They've kind of been sneaking it in there the whole, for a while, and it's gotten to the point where, like, the wholesome parts that we liked aren't there anymore, and it's all just trash. And they're kind of saying, like, oh, no, we can change our public tone, sure, but you're not actually making good family movies yet still. Okay, so when you put out a project that is like a really good, solid family film that has good lessons in it that us with families all like, then maybe I will go and buy Disney. But I don't think it's going to happen. And then on top of that, Lucasfilm is still controlled by Kathleen Kennedy, and man, how can you have somebody that basically she basically inserts herself into every movie, right? Everything that they've done at Lucasfilm has basically been they introduce a new brunette character who is a stand-in for Kathleen Kennedy that they want to take over the series. That's every single one, and it fails every single time. And how can you do that like 3-4 times now and still want to continue to do it? She has to be some sort of wild narcissist, right? Because if it was me, I would be giving up at that point. And I would be like, I'm going to resign from Lucasfilm and start my own project and try and do something different, right? Like, it just wouldn't. Disney Marvel became a whole slew of self-inserts. Well, I like your YouTube live, but I'm trying. Well, you know what? I haven't been giving a very good rundown of reading the DOM here. But one, because I kind of feel like that those videos give you the information that you need to know to be able to interpret the DOM. But also because a lot of what we're seeing is just random, right? You'll tell when I see something that I think is actually might actually be important, I start talking about it a lot more. Right. It's just it just has to catch my attention. And as of late, it hasn't been. City woke. Well, it is a big problem because here's what's really happened in the movie industry is that the corporations, I mean, I guess this is not just in the movie industry, it's kind of across the board, but basically what has happened is executives don't like taking risks anymore. They've basically become all about how can I make that quarterly earnings report look good to get to the investors so that more people buy my stock, because that's how they make money, right? So when they're making movies, everything has to be focus tested, right? Like this is with Star Wars. When they made the Rise of Skywalker, the last one that they made, right? They like changed the ending 3 times or something like that because the test audiences didn't like it. And then the test audiences still didn't even like what they eventually came out with. But like it's all focus tested, right? So basically, they're not giving creative people the room to be creative. And so what the creative people are doing is they're saying, well, in order for me to be able to do what I want to do, I have to package it in this thing that looks safe, right? So they will have some sort of weird woke idea for a character or for a franchise or for a story, and they know that that would never get approved on its own with its own original characters and so on and so forth, and so they have to package it in the packaging of an existing franchise that, you know, the executives think will make money. And that's why it's doing that. What feeds do you have in Financial Juice? So to be honest with you, I very rarely come over and actually look at the page here like this. I listen to them. That's what's valuable about Financial Juice. I guess if you don't have Twitter, this is a pretty good replacement or alternative, right? So I have bonds, commodities, crypto, equities, forex, indexes, macro risk. I don't know if I really look at it that carefully. Let me come in here. So I don't know if I'm that interested in the Bazinga stuff. That would be like too much stuff. Economy, I should add that. Well, I should just add everything Bloomberg. I think that they've shifted it a little bit. We definitely should have a Federal Reserve. Reuters, Wall Street Journal. Anyways, I don't know if it matters too much. Okay, well. I'll tell you what, I feel like these happen too quickly. When it was at 04, I was kind of like, okay, let's see what happens. They slipped up to 05. I guess we're only one step further than that. When I'm looking at the volume, it's like 1000s, right? So I do have enough of a thing that, like, you know, I probably could have gone long 04 and it worked out. I wouldn't say that that was like a super attractive trade to me, but that looks like that was a trade that probably should have made. But when I'm looking at correlations, okay, I do see quite a bit of autocorrelate, or not autocorrelation, but correlation with the Japanese yen. And I also see the dollar dropping. So this looks like more of a currency-driven move. I am seeing it across the complex as well. So I'm seeing gold move. Now, Bitcoin is also moving here quite aggressively, in fact. I do feel like Iger is cooking the books. Well, like, even after everything that he's done, it doesn't actually look super great. It's just, it was better than the market expectation, right? Still not going to invest in them. Sure, at some point they'll make money, but I don't want to be involved in it. When it comes to your portfolio, here's the approach that I would like people to have. You got to think of investing as art. So art doesn't just mean you're doing something and it's complicated and there's lots of little decisions in it, right? Because when you draw a picture, there's lots of teeny tiny little decisions that you're making about a picture, right? But if you know, there's a lot of things that are really complicated, they don't consider them art. You know, they're just like crafts. That's why there's arts and crafts, right? For it to be art, there has to be meaning behind it, right? So there should be meaning behind the decisions that you make for your portfolio. It shouldn't just be about organize the portfolio that will make the most money that year. I mean, you're never going to get that, but you can try and compete with everybody and make the most money, right? But I think that you should make some decisions about which companies you want to invest in that says something about your view of the world, the companies that you think are going to bring the most value to the world, where you think the world is going and where you want the world to go, right? And Disney is just not a part of my view, you know? Which playlist of YouTube I need to watch? Well, if you just go to the front page and they're like listed on the front page, right? Because there'll be like there will be start here playlist, and then it shows you all the videos in that one, and then order flow playlist, and it shows you all of the ones in that one. Don't say that I only use news. So the issue, Guy Man, is I think that this distinction between like news and technicals is not a useful separation, right? I'm looking for things that will predict orders. There's a lot of things that will predict orders that I think would kind of be more traditionally considered technicals. Like current positioning is something that can predict future orders. CTA strategies, that's momentum. That can predict future orders. Wouldn't really consider that part of the news, right? That might be what's driving them right now. It seems like we're on the upswing. What was I saying? What price did we need to get to before it was like a clear outside day? And a breach of the overnight highs? 15.5? Can that even be right? Yep, it is. So the next kind of big line in the sand that I see right now is 108.08 half, although by the time they get there, it might be a little bit closer. So I don't think that I want to take a trade because we're getting very close to an area where I'm expecting to see some rebalancing from the market makers. Toucans in Discord says, I'm not sure what's better for me to bitch about missing trades than to bitch about losing trades. Yeah. I'd rather miss a trade than lose a trade, personally. I think I missed this one, though. You think that there's going to be another leg? I don't want to play it right here, just ahead of 08 half. Maybe we could wait and see here what it does. I feel like that was a missed opportunity. Well, was it that big of an opportunity? I don't know. I don't think that I understand why it's moving up quite the way that it is. And if it's could just be traders trading, that could mean that it can very easily flip around. Oh my gosh, I was just reading on Twitter and I thought it said TikTok to ban abortion politics, but it said from a TikTok ban to abortion politics. I just didn't, I needed to actually read it instead of just glance at it. I'm not dyslexic, I swear. I do wonder if is it just CTAs here that are going long? I mean, because we didn't get any central bank stuff, right? Nah, forget about price action and smart money concepts. I have videos about both of those things that explain why they're useless concepts. What you should combine with your trading is things that you can actually prove with data, right? With empirical evidence. So empirical means that it can be verified by other people, right? So if I come in and I say, here's this awesome strategy, I traded it and it worked, so why don't you use that strategy, right? And then you use that strategy and it doesn't work for you. And then what do? You say, oh, I must have done it wrong. We'll talk and I'll say, oh, you made this mistake, you made this mistake. the issue is that with the strategy that I gave you is not reproducible by you. You cannot verify it. So therefore, it's not empirical because you can't verify it, right? So how do we make something that's empirical? Well, what I can do is I can create an algorithm. And I can say, here are the exact entry and exit conditions, and here's the code to do those exact entry and exit conditions. And now you can run that piece of code against any data set that you want so that you can verify, okay, during the time period that Seth traded, how did it actually perform? And does that match up with what Seth says the performance of it was? How does it actually perform over a 5 or 10 year period? Does there actually perform over a large enough data set to have a statistically significant probability of there actually being a real aberration in the behavior of the market there, right? Empirical. You can verify it, right? So if you go and you read a peer-reviewed journal, right, they're giving you data and all of this stuff that you can independently verify. That's empirical. Peer-reviewed study is empirical. What some guy says on the internet about a certain strategy, that's not empirical. And so when you go out there and you watch a YouTube video, they say, hey, I really think that price action trading is super great, and here's the reasons why. And they might have all of this logic, okay? But that's not empirical. And if they don't have empirical evidence, I would just completely ignore them. Just completely ignore what they're saying. Now, it's my understanding that only HFT can be traded the way that... I'm not sure what you mean by the way that you're talking about, but... I'm going to stop trading for the day and watch the playlist to sign up with... Oh, okay, that's good. Yeah, I think that price action and smart money concepts are just absolute nonsense. Good question, Kevin. It seems to me, though, that yesterday's price action may have been due in part to the central bank speakers. There wasn't like they said something and you oh, okay, I see what you're saying, Nicholas. Hold on a second. It's not like they said something and there's a headline and then the market immediately reacted to it or that sort of thing. But it seems like that the market has been anticipating any central banker to be a little bit dovish, and they've kind of just been like gently buying through it because we got these guys are supposed to be speaking in like a minute or so, right? And we're up. And I don't really see a clear explanation, right? A lot of my friends are learning as smart. I know. Well, it's the popular thing on YouTube, right? So you know, I made a video about this, so you can watch it. And there's some other videos where people go into like the guy that created. So basically, there's this guy that created Smart Money Concepts, who is basically a notorious bad actor. And basically what happened is he became so notorious in the Forex community that he wasn't having success over there anymore, and he moved over to Forex. He moved over to futures. And around that time, he just took off on YouTube. And so now there's this whole little boutique industry of people talking about his ideas, which really aren't his ideas. He just took ideas from price action, essentially, and came up with a different reason behind it that would sell good for marketing, and like changed all of the terms and stuff. Okay, but he's basically a complete fraud in my opinion, and YouTube just has, you know, pushes whatever makes them money, and they push absolute frauds to them. And so, yeah, it's all over YouTube, and like most beginning traders, they're coming in and that's what they're trying to learn, even though it's complete nonsense. It's complete nonsense. And, you know, you're never going to have success with a strategy that is popular on YouTube, right? So I'm saying you can have I can have information to prove to you, like, because of the structure of the market, there are certain things that happen. That's the other thing, is like, are they saying it happens because of the structure of the market, or because that's what people tend to do? Because if their reasoning is that's what people tend to do, they're probably talking about nonsense, because what people tend to do is random. People are random, okay? But there are some things that the market has a tendency to do. But if everybody on YouTube knows about that, pretty hard to make money off of that, even though it's built into the structure of the market, right? So it can be base. You wouldn't want to trade against it, but it's not going to provide an edge for you, right? Now, us here on, on our channel, we're small enough that, but I always, what I'm talking about is like informational inefficiency. Well, there's maybe me and the dozen guys here on this stream that are looking at that particular thing, right? So you can maybe still glean some edge from that in situations, right? But I really love the content that I have. I'm really proud of the content that I have on my channel. I've tried to provide you empirically backed, good information backed by peer-reviewed, empirically backed studies, right? And you don't see that anywhere else on YouTube. So can I say, like, all of the other content creators on YouTube suck except for me? I guess that's what I believe. But if you found me somebody that was showing you empirical data, then that would totally change my mind. I've never seen it, right? Okay, so Lucas was saying, it's my understanding that only HFTs can be traded in the way that you are talking about. So yes and no. So one is, could you find a new behavior in markets that is consistent, persistent, and based on the structure of the market that has not been discovered, and there aren't other algorithms trading, and that you could potentially trade by hand? Sure. Probably super, super hard. Could happen. Could happen. But the sort of thing that I'm talking about is like, if there is a behavior in the market, we should be able to prove it in the data. So that doesn't necessarily mean that you would be able to trade it, or that you would be able to trade a strategy successfully. That's why when you look at these peer-reviewed studies, the peer-reviewed study is usually not, here's the strategy that we set up and here's how it performed. It usually doesn't happen. And if it does, it's like, that's their first study. They're like, this is like their graduate project or whatever the deal is, right? But the guys that have been around a long time, they're kind of more, let's just look at the data set and see if there's a statistical property about it that we can tease it, that we can find, essentially. And, that I can prove that a statistical behavior exists is a little bit different from that I can actually beat everybody else to the trade is a separate thing. But so but you've got to be empirical about it, right? But there are things that you can prove that are empirical about the market that are not high frequency time frame, right? Like CTA strategies, that's not high frequency time frame. And if I was a quant, I think if I was a quant, I would be taking what I know about execution and correlations and kind of trying to take a side strategy from CTAs, try to take advantage of the CTAs, what they're going to do, knowing what they're going to do before they do it. Something along those lines, right? That wouldn't necessarily be HFT. So don't limit yourself. Okay, there's lots of things that you can learn about the market. And sometimes they might not seem important in the beginning. And as you go along and you collect more information and the pieces kind of all fit together, you kind of be like, oh, and then you'd be glad that you learned those things. So don't limit yourself. Well, so if you watch my video, Prince Trader, if you watch my order flow videos, like all 6 of those videos, by the end of those videos, I think you will have a very clear answer to that about what you're going to do next. Okay, so we're coming back to 04 half. What I'm seeing right now suggests to me short-term regime change post meta order leg. So I'm not getting something that would I'm not getting flow that would allow me to go for a reversal here. I'm getting flow that maybe if I thought that there was going to be another leg to this move that I would maybe do. But looking at this move now, we are a good 30,000 contracts long since let's say since the open. Started a little bit before the open. So that's a lot. That makes it very, very difficult for me to try and take a short, right? If there was going to be a short, I would probably have already seen it here. So instead, I'd probably be looking for a spot where I could go long and maybe catch another leg. But I'm not too sure if there will be another leg. I feel like 30,000 contracts is a lot. And for what? You know? And this is the struggle, is that I'm just not entirely sure what's driving this market. The S&P 500 is down. So this is kind of curious. Why would the S&P 500 be so unhappy? Because that's a pretty aggressive down move on the open, isn't it? How do you think Zero Hedge is spinning this? Pork price plunge sends China consumer prices back into deflation. Feds say they uncovered prostitution rings serving several politicians, military officers, and tech executives, I'm sure. Continuing jobless claims jumped to highest since April. Okay. It was 1,000 more than last week, but okay. Yeah, Fed's barking is speaking now, but I don't think saying anything off of the data dependent script. Yeah, I haven't heard. Well, let me come in here and refresh some. Oh, actually, you know what happened? Account settings. Oh, when I come in here to financial juice. Oh, okay. Now it's fixed. It wasn't reading my clock correctly. Now I've got Feds, Bostic, and Barkin speaks. These ones I do not have on the Forex Factory calendar. Oh geez, this is coming all the way back now. This is curious. Okay, so I missed something. They're selling it on the long end. They're selling it very aggressively on the long end. So maybe I should have taken the short there. I think I made a mistake there, guys. Let me show you what I missed. Oh, I'm just not very sharp right now, am I? I need to get into the zone, folks. I like talking too much is what I guess the problem. Do this right here. That's what I missed. I saw this in the 10-year and thought, okay. This is just a pullback or whatever. I don't know if we care about this. They were dragging them down in the 30-year, so... I wonder if I come into this G-Ink thing, if there's some settings I want to change. Oops, not that. Options. Okay, it fell, but it recovered back to 04 pretty well. Nope, I guess not. Okay, so yeah, why am I not here? Okay, I should probably be hearing something in my news squawk right now, and I didn't. But so let's see here. Fed's Bostic policy is likely to be sufficiently restrictive. Is that perhaps why we sold? Anecdotal evidence at odds with the latest GDP report. Okay, that is a little hawkish, actually. I believe a slowdown is coming, which is needed to lower inflation. There's a wide range of potential outcomes for the economy. But they kind of come back to the middle, so now we kind of get a choice if we wanted to go long or short. I'm still a little bit uncertain. I have some evidence for a large meta order long, but not enough evidence for me to determine that one will continue. And I don't know how much of this contrary trade is due to them speaking or due to something else. It's also kind of like in a decision point where I wouldn't expect either side to have a clear advantage over the other. So we just kind of have to watch it here and see if one side ends up, outlasting the other. Gold is moving here now. Gold is moving up quite aggressively, in fact. Bitcoin holding its gains at 3,800. I should do a quick check here for if there's some Bitcoin news. Don't diddle in the middle as... That's funny, dude. Could it? No, why would you think that? The only thing that I've seen that is predictive of a liquidity hole is large transactions or staying in an area for too long. Because what causes the liquidity hole? The market makers becoming strained, right? So market makers rely on correlations. So, there being a strong correlation with something would make them more likely and more confident about holding liquidity. But I suppose that you could say if you were to look at R squared will drop in a liquidity hole, right? But that would not be a leading indicator. That would be a post indicator of, oh yes, there probably was a liquidity hole there. Because if you go sideways, then there's no autocorrelation, right? I think that like a line like this would have autocorrelation be 1, And a line like this would be autocorrelation 0. And a line like this is autocorrelation 0. Noting one of the things I've been noting in the cryptocurrency market is that fees have been moving up. That has been something that has kind of come and bit them in the butt and hampered rallies in the past. $925 fee to move 20 cents in Bitcoin. Okay. Wild. Former NYSE president in talks to reboot FTX exchange. That was what I read yesterday, so that's nothing new, but kind of seems like a bad idea, but whatever. You go ahead and do that. JP Morgan says crypto rally looks overdone. Well, I wouldn't put any stock in that kind of analysis. Yeah, Bitcoin briefly tops 37K mid market optimism for pending spot ETF approval. Every time that I come onto Reddit or wherever the place is and try and find information about why is Bitcoin moving up, it seems like their go-to explanation is ETFs. And I just continue to be bewildered by their optimism that an ETF will get approved when every indication that we've gotten from the SEC itself suggests that it's not going to happen. Let's see if they got something in here. Bitcoin's most recent price surge has been attributed to the potential approval of 12 separate spot Bitcoin ETFs over the next week, according to Bloomberg's ETF analysts. The SEC has a window until November 17th to approve a number of high-profile offerings from prominent U.S. fund managers, which I think will all be denied. But let's see. Maybe I'm wrong. Somebody with money definitely thinks I'm wrong, right? While there is much fanfare over the potential approval process for these highly anticipated BTC products, both analysts have noted that there could be a lag time of a month or more before these offerings actually launch. Meanwhile, the Grayscale, the largest cryptocurrency asset manager in the U.S., has also reportedly engaged the SEC to directly convert its trust to a spot ETF. The U.S. is yet to see a spot ETF approved, which would allow investors to gain direct exposure to a financial product that is physically backed by Bitcoin. Okay. It's kind of interesting, though, that it seems like the whole complex is moving here today. Now, this move down in the bonds coming back over looks like it was driven primarily by this selling in the 30-year. And it's continuing, by the way. It's very aggressive selling in the 30-year. Like before, everything kind of seemed to be correlated. Japanese yen was up, gold was up, all the treasuries were up, dollar was down. Well, now what are we seeing? Dollar is still down, but the treasuries pulled back. Okay, so the treasuries pulled back, but everything else is the same. Treasuries pulled back, dollar is still down, gold is still up, Japanese yen is still up. And I guess, the last 20 minutes, the S&P 500 has been selling. Yeah, you're seeing. Well, you probably would see selling in TLT because it's the long end of the curve that's doing it. But I suppose that might make us question if the selling is actually coming from the ETF. I don't know. I would think when you're selling in TLT, I tend to see it in both ZB and ZN. But right now, I'm just only seeing it in ZB. Now, one take is just a spread trade, but it's almost 5,000 contracts. ZB, that's a pretty big move. Let's reset some things here. Recenter. I'm gonna make a note of what the 30-year is doing. How is this going? So they just took one, and that offer followed it pretty closely. Like there was immediately 400 contracts on offer when it ticked down, and the 10-year ticked down with it. Call options expire in TLT tomorrow. Ah, so maybe they're just taking profits early. Here's a post on Reddit. Is this a sucker's rally? Buy the rumor, sell the news, beginning of a bull run, question mark? Where do people think Bitcoin is currently? Is this purely a case of people buying the ETF speculation only to sell once it's announced? Is it a sucker's rally in the face of a growing number of indicators that say we are staring in the face of a US recession? Or is this likely to be the start of a bull run? I want to see show me one piece of evidence that suggests that the SEC will approve any of these. I think this is still down to like, these are really big guys that are doing it, so of course the SEC will approve those ones. Because it's black. They wouldn't deny BlackRock. So next little step here at 114.05 in ZB might be, nope, guess they're not going to go. This is everything else kind of holding in its place, except for ZB is an odd situation that I don't think I've ever seen before. And my gut instinct is to just ignore ZB. Well, I'm going to watch it really carefully, but my gut instinct is that that's not going to last, that they're going to move back up. And there was actually probably a pretty significant uptick back to 04. I wouldn't say that the market orders were with it, so I still don't think I'm getting enough of a flow for me to justify taking an order. I kind of feel the desire to take a trade though. S&P 500 seems to maybe be trying to find a base. Right now it's like trade back to 4,400. Well, again, tomorrow, well, let's see here. What is tomorrow? That's right. Options expiration is next week, but there's a lot of TLT options and stuff that expire tomorrow. Well, let's see here. What do you got, Lucas? The answer for this can go many ways, but I'll share one accompanied by my whiteboard diagram below. Two main things we're looking for here: an understanding of curve dynamics and a knowledge of how margining impacts how we trade. With a liquid market, with a market this wide, we must ask why that might be. It's likely that this market doesn't trade on screen so much, is newly listed, or doesn't really have a market maker. This could be a newly listed back month expiry, or it could be the front month in something like NZ Power. Okay. That's something that's not paid a lot of attention to. Should I really read this, or should I be trying to take a trade here? No, I'm going to ignore it. I feel I'm getting this gut feeling that we're going to reverse up, but I don't think that it actually fits my kind of like what I'm looking for. I don't have a clear reason to think that the flows would shift up here, and I'm not actually seeing a whole lot of evidence in the volume that we are going to flip up. I guess that the only logic that I have behind this is that the selling seems to be primarily in ZB and in nothing else, and ergo it will revert back up. So let's read it. Yeah, if I did it, it would be a live trade. All the trades I took this week were live. Also, it sucks is because I've had 2 really good trades as of late that were, I screwed up. I thought they were live and they weren't. Okay. We could drive a truck through the BBO volumes, I think that means best bid, best offer vols. We can't really give them too much weight. The fair curve could be anywhere in between. A first step is to try and look at similar instruments, near expiries, or other highly correlated markets. The next step would be to look at where things are actually trading at, but chances are, given this spread, there's not much happening. Most flow, if any, probably went over the counter or over the phone. If we can get some trades, EMA, their IVs, and we can skew to them. In absence of the above data, we must consider that volatility is heteroscedastic. Any chance... Oh, I forget what that means. I think Taleb explains that, but let's see here. Refers to a condition in which the variance of the residual term or error term in a regression model varies widely. If this is true, it may vary in a systematic way, and there may be some factor that can explain this. Okay. That basically means vols tend to jump up and drift down, so toxic flow is more likely to be on the offer versus the bid. Ah, yeah, okay. This means that just placing our theoretical at mids would be generally misguided since we're happier quoting tighter bids than offers. The second reason, yes, that's exactly. So like when you're trading the 30-year, that's exactly what they're doing, right? Is it basically whatever trade you make, since you're the only one in the market maker adjusts to that and makes their bid or their offer higher or lower based on the trade that you just took, because they're saying the toxic flow is more likely to be on the offer, so I have to raise my offer essentially and screw you over. Yeah, okay. The second reason for skewing our theoretical to the bids, well, in this case, they're saying people are more likely to buy than sell, right? Okay. Comes from margining requirements. Options have convexity. Being long options gives you capped downside and infinite upside. Because of this, clearing agents require you to post a portion of the underlying value as margin to go short an option, but only require the premium to go long. This means for a sell, we lock up maybe 3 times the capital we would for going long, meaning we want more edge to justify the increased capital use. There are many ways to answer this. Basically, just didn't want to see you say just fit to mids. Ah, yes. But he's basically saying that there's a couple of reasons why instruments tend to buy more than sell, right? And that they kind of hold their offer a little bit higher because of that. Okay, 05. So I didn't miss anything. Nor did I see a shift in the volume from that. Jeez. So I'm looking at this. I was looking at like 4545. We moved. I'm looking at this looking like maybe that was all that there was. I didn't even get like 3 ticks. So there was not a trade in that for me. It could still go. But I'm kind of suspicious that it might settle here a little bit. This answer is interesting. Show your bookie a 4% wide 2-way on a job. I don't know. Some of the things that you're saying don't make sense to me. On job lot adjacent delta and see which deals first. Yeah, so you're saying test the market and see which one they hit and then make your decision off of that, because I do that sometimes, right? Although I don't like to put like on both sides, but sometimes I'll see it and I'm like, oh, okay, there's nothing at 4547, so if I put an offer there, do they hit into it right away or not? And that kind of will help me that will help me confirm that the trend is really the way that I think it is. And if I do that and they hit me right away, that's like right away not necessarily a good fill. But if I see like a ton of volume after me after that, like they fill me, but then I also see people hit it the other way, then I'm usually like, whoa, okay, I don't think that I actually want to be involved in this spot, because there's actually more liquidity and activity here than I thought there was. I really appreciate you sharing that one, because that's kind of more of a I've always said, you know, like when you're trading these really thin ones, you kind of get this thing where you get screwed. Like you have to trade up to buy it, like they're at 4,698 and you buy it, right? And then after you get in, even if they're going up, it's like you don't get paid. Like they don't put the offer where it should be, you know? And it kind of seems like that it might be accounting for that. That might be that heteroscedasticity, and might be how the algorithms are kind of making that judgment call that I need to be a little bit lazy with lifting my offer, essentially. Or sorry, a little bit lazy with lifting my bid. It's like what will happen is you'll lift it up here, and it's like, okay, if they want to buy more, then they'll definitely let you. But if you want to get out, I'm not going to let you be profitable. And so they're a little lazy with lifting their bid. Yeah, that would fit more. Right? Basically to say, if you're going to buy, I'm really going to make you pay up for it. And then you're not going to be able to get out. I don't know. I would have to think about it a little bit more, but that kind of seems like a programmatic answer to something that we've seen over here a lot. They immediately turned back down. Now, that time, there was a little bit of volume in the 10-year to make it happen. There was a little bit of a shift in cumulative delta to make that happen. And the 30-year continues to sell it. Well, okay, so to that point, I don't think that he actually proved it, right? The way that he talked about it kind of suggests that there probably is research out there that backs that concept up, but he didn't actually show us the proof of it, did he? The logic seems sound. It matches up with something that we've seen and theorized about, but he hasn't actually shown us a study about it, but strongly suggests that such research exists, even if it's not public. I've searched for undergrad degrees, barely in statistics. Yeah, no, there's not. You're right. It's a master's thing. Yeah. Well, now what do we do? So, geez. So, I again, I was thinking like, oh, it's going to reverse up. And I said, I only made 3 ticks off of it. So, whatever. Really didn't think that they were going to sell it back down there and that hard. But it really careened down there, didn't it? That's a lot of selling in the 30-year. I'm wondering if maybe, though, it's a spread trade. Like, maybe they're already long the 10 and now they're just selling the 30. I don't know. Theory. I say I don't know sometimes too much these days, don't I? But theory. Maybe they already took the other side of the leg and the 30 years just the opposite. I've found that like the second leg is, when you're doing a spread trade, they're kind of like sneaky about the first one and then more aggressive about the second one. Isn't that what we decided last time we speculated about this? That's something that we should do some research about. Like, I really want to see research about spreads in the yield curve. Like, can I find a study about the knob specifically? Right? Okay, but anyways, so the trade was short 04, and that was not one that I was looking at for. I do have enough evidence to maybe try and jump on board with this, but it's kind of already gone a little far. Normally, I would love to be going short, though, on some sort of a break here, but we've got that 108 location again. So I think what I want to see is them come to 108, maybe there be a little bit of liquidity, a temporary bounce that doesn't go very far, and then they start to extend lower, and I might be able to chase that one. And the timing is right that I think we might be able to get a trade on that before we go today, but it'll be tight, and I am concerned about things reverting here. So the 30-year is coming right to its low. Okay, Barkin says we're not seeing the full effect of rate hikes. Was their comments very hawkish? Perhaps. The S&P 500 is puking here. Yeah, another good example of cumulative delta. Yeah, if you're using the cumulative delta for the signal, you would get smoked in this situation for sure. I mean, if you were only paying attention to the cumulative delta in the 10-year, then you would get smoked for sure, right? Because you would have been getting long here. See, I was thinking about 5-6. But it looks like they're not going to give that one. Oh, okay, so the 30-year did push new lows. Well, they might not do it the way that I was thinking. That was an okay hold there at 108. I don't think we necessarily saw a ton trade there. I think it was just 1,000 down, 1,000 up, right? And then 433 backwash on the backwap. There was? Oh, dude. Let me show me that one. That's what I've always heard about spreads, was that there's some mean reversion trading. So how did they go about doing the mean reversion? Maybe you've shared that with me and I've looked at it and I didn't actually look at it. Or I found it, because there's I have a couple of papers on this. I'll download it and I'm like, oh, I'll read it later, and then I forget about it, right? I have lots of those. Since it's coming back here, I mean, we had a little bit of selling here in the Japanese yen when we got pushed down. A little bit of selling in the gold. Bitcoin doesn't seem to be backing off, though. I'm sure that there's still somebody really big buying over there today, because they think the ETF's going to happen. Dude, I hope if the SEC comes out and rejects 8 Bitcoin ETFs, all of them, it's gonna be so effing hilarious, man. I hope so. With many trading instruments, TA works, but originally was developed, they didn't use it as retail traders do. Mismanagement is very dangerous. Well, the way that these guys, so just as it is with momentum, we think that momentum is oh, it's going up and it's going up fast enough, it's going to continue. But that's not how CTAs look at momentum. CTAs look at momentum in relation to other instruments, right? So how do they look at mean reversion? I'm not entirely sure. I'm going to bet that the paper that Lucas is talking, and I hope he's looking for it right now. He probably, because he went quiet, he's probably looking for it. Keep looking, just to ignore me. But I'm gonna bet that it's not what retail would typically think of as a mean reversion strategy. I doubt that it's going to be like when this oscillator gets above this value, then you go short and yada, yada, yada. But maybe it is and I'm wrong, and we can put that on there and I'll back test it and find out that actually it works really well. We'll see. Okay, so it actually is doing what I anticipated, isn't it? Except for that I'm not liking the volume in the 30-year here as this is happening. I'm a little concerned with the way that that kind of shift in volume around happened at 30, that there might be some more pushback than this. Basically, my idea was let it bounce, and then we can try and go short from a better price in the hopes that they just careen down through here. But I'm actually seeing them push back the other way in ZB. I'm actually seeing some evidence of a counter trade now here in at a location where they would have a lot of impact. So I'm actually kind of leaning. I don't think that with the way that the curve is moving, that this trade makes sense for me in the 10-year. But I'm kind of wondering if ZB is going to, if the trade is from 03 to 09 here in ZB. At the money puts being bought that expire. Oh, geez. Well, okay, that just did it for me. Okay, I didn't like how I got filled. So this is just what we were talking about. I went and I tested the market. I put a bid out and they almost immediately filled it. So I don't like that. But that 3,000 contracts that traded at 1/2 kind of suggests to me that there could be, that there's more ready to happen here. That, and Octavius saying that they're buying at the money puts kind of suggests that somebody is expecting the treasuries to drop a lot more here today and tomorrow. That's kind of that's a really odd, I mean, that's got to be a lotto ticket trade, right? It seems like a really odd trade to make. I certainly, last thing I would be doing is buying puts the day before they expire on weeklies. It's kind of quieting down a little bit. They've been sitting here for a while and not a lot of volume has gone through here at 01/1/2. But that's probably because the attention is being paid to the 30-year. There has been a decent amount in the 30-year there. 228 versus 126. There are decent amounts in the 30-year. S&P took a little dive there too. Nick Timoros, Atlanta Fed's wage growth tracker was 5.2% in October, unchanged from September. People who changed jobs, the tracker was 5.6%, the same as September. For those not changing jobs, the tracker was 4.8% last month, down from 5% in September. Oh, so did we get some news at the top of the hour that shoved us down? My news squawk wasn't aware of that one. Okay, so there's some hits at 01/2 that were absorbed, or let's say didn't take. I don't know if I can say it, what 12.16. I don't know if I can say that that was absorbed. They took it, some more offered out when it didn't tick up. Yeah, buyers held the price, but sellers are pushing. Well, and I would say that this reversion back up here was not. There was a little bit of pushback in the 30-year, but in these other instruments, it was just the pressure coming back off. It was just the sellers backing off of their selling. So that's post-meta order short-term regime change, right? But then we saw some icebergs, and this is the first like major iceberg that I can recall seeing, and they sold through it. So there they ticked up. It took 1796 to get through that price, and then they weren't able to hold a bid. Only 125 on the bid that time. Okay, maybe a little bit of a liquidity hole here at 0.5 though, huh? Right, you see they're not holding a lot of liquidity on either side now. Have you ever tried building a strategy around icebergs? Yes, I did, and it was a disaster. Very early on, I used to really pay a lot of attention to icebergs. I almost always got in on an iceberg, in line with the iceberg. And it worked really well for about a month, and then it was dismal. I tell you what, that's the way that order flow goes. Is like you'll see a pattern, and it's like it works every time for like a month, and then it never works again. Like, okay, so that's not too good for our position, is it? So like they kind of came down to the key spot we were, wanted to see them extend back down to, and they didn't take it. 2 ticks back up, and I got filled a little bit too quickly. Now they are coming back down here. It looks like there's still a little bit of a hole here at 0.5. So I think we're okay, but that last little move was not favorable, let's say. It was all little tea leaves. This doesn't mean that I necessarily want to dump the trade, but it was just not a good sign, that one. So let's see if they can build some liquidity on the offer at 0.5 here. Come on. Okay, that's really good. Now if we can get them to take 0.1. So then the idea is to develop a strategy, something like a system of systems to predict when a specific strategy would work. Yes. There they go. They took only 355 contracts, huh? That's very favorable. So yes and no. So I do think that there could be some things with order flow where you can kind of have this Markov system, and then you choose which strategy to use based on this hidden Markov system, right? Determining which state the market is in. Are they fleeing liquidity or moving towards it, or whatever the deal is, right? But then another thing is that one of the things that happened in the quant industry, and this was kind of like around the 2017, 2018 time period, was basically these guys would get all of this computing power, and then they would, write up all of the different kind of indicators and things that they wanted this system to use, and they kind of gave the system ideas on how they could randomly use those things for entries, and then it would just combine them randomly, right? And it would do it generationally. It would be like, okay, do like 50 different back tests, and then keep the top 5, and then from those top 5, then do it again and make new strategies that are based on that top 5, but you're constantly doing variations, right? And you do that for a couple of generations, and then hopefully you end up with a strategy that is kind of effective, right? And what would happen is they would go down that path, and then like it would stop working. And so then they went down that path. They started to say, so can I predict which way these systems will start to go? Because it's like constantly shifting. Can I determine which way these kinds of algorithms and stuff will go? And then what happened was the volatility crunch, or should we call it the volatility explosion, in February of 2018 came along and just absolutely demolished all of those trading firms, and they all went out of business. So I don't think that shows that the idea has no merit, but clearly there's still some issues with taking it that way, right? So because basically you're doing technical analysis on a system, on systems of technical analysis. And as soon as everybody in the industry starts doing that, then it doesn't work anymore. But I guess that's part of one of the things is like when I'm doing back testing, I don't want to just, okay, here's an indicator. I don't know anything about it, but let's just back test and see what happens and all this sort of thing. It's like, no. Like I need to have some theory about the market and how the market tends to behave and work, and especially like based on market microstructure, and then program it up. And I should see that the market behaves in the way that I anticipate. So like, but I want my first back test to actually look pretty good, because that means that maybe there actually is something to my theory. I don't want to just data snoop and find something, because those ones are less likely to last, right? And I'm less likely to be based on market microstructure and more just like maybe a random coincidence that I'm picking up on. Okay, well, they're able to go across 01 a couple of times. They're not really holding liquidity at it, but they've been able to cross that line in the sand a few times. Some of the bids here, when they do go down, seem to be a little flighty. Okay, so that time it was 1,000 contracts. That's pretty standard, but there's a couple of times where they've crossed 00 half, where it was like hardly anything. So we're kind of getting some signs that if we do break here, that you could see some bids pull out of the way and we might get some stop runs. So I'm liking that. But the big thing that we need to see is more selling. Well, we're getting pretty consistent selling here now. I am getting enough of an auto-correlated flow to the downside in the 10-year. Feel good about this. I would like to see it be a little bit more aggressive, though. But maybe they're not going to do it that way. This might be a really passive flow that's selling it. The idea is to develop a strategy of strategies, like a system of systems, trying to predict when a specific strategy would work. Therefore, an edge exists. An edge in a market. Inefficiency market tries to perfect efficiency, but exploiting an edge means a move towards efficiency. Therefore, every edge has a time limit. So again, let me approach this a different way. The thing that we want to avoid is data snooping. Okay, so what is data snooping? Data snooping is like taking a gun and shooting a barn, the side of a barn, and then painting the target on the barn after you've taken the shot, and then saying, "See, look, I made a bullseye." That's what data snooping is, right? So data snooping is going through a data set, looking at what worked in that data set, and then saying, look, here I found a profitable strategy. And the problem is that most of the time those don't continue to perform, and so they do something instead called forward testing, where they will fit to a certain data set, and then they'll test it on another data set to see if it works on that other data set. And if it does, then maybe you actually have something. And that's forward testing. And that's how we get around the bias of data snooping and curve fitting. Okay, curve fitting is basically, you have a strategy with a bunch of different parameters, and you just adjust all of the parameters until it works the best. And what you're actually doing is you're creating a line that matches perfectly what the past market action is, but it's not going to have any efficacy in the future, right? So it's kind of a similar thing to data snooping, but data snooping is kind of more like, I'm going to go and do all of the possible combinations of this particular thing and pick the one that works the best. Okay, anyways. So what we want to do instead is we want to have a reason. So what we could say is, okay, when the market becomes very illiquid, when the volatility is high, then there are certain behaviors that start to show up that we can take advantage of that don't exist in other market conditions. And then we can write an algorithm that says, okay, when the market is in this condition, use this. Boom, right? And then we can have a bunch of different strategies like that, and we can combine them together, right? And that would be a different thing, because now we're not data snooping. We're actually putting to practice our knowledge of the market, right? Okay, so just want to note, we did breach the regular session low by 1 tick, but the overnight session low was 30.5. And the 30-year seems to be pushing new lows as well, as kind of helping us. No. Oh, so there's something else you said here, that therefore an edge exists. An edge is a market inefficiency. Market strives to perfect efficiency. Exploiting an edge means a move towards efficiency. Therefore, every edge has a timeline. Okay, so not every inefficiency is actually an edge, because it could just be random chance that inefficiency is there, right? I mean, the larger thing here is to prove that something is not random in the market is really hard. We think that we can just look at it and see that we'll see those things, but it's not. It's the amount of data that you need is well beyond the capacity of the human brain. U.S. Senate Republican leader McConnell, time to offer a clear victory strategy against Russia. You know what? I think that is a really smart comment by him, because I really do not want to see Russia win in Ukraine, but I'm not very confident that my tax dollars are being spent efficiently. And so coming in and saying, well, yeah, we can give you more money, but first you have to explain to me how you're going to win, because I'm not just going to throw more money at it, and I need to know that it's going to be used effectively, because I'm not sure that they really have a strategy right now other than just give us more money and we'll throw our troops at the line again. So I like that, because it kind of puts the ball in their court and still provides the opportunity that maybe we can find something that will work. But we'll see. Okay, I should also note we traded about 10,000 contracts at 31.5 here. So I think some of that was from earlier in the day, but it's kind of looking like if they push to a new low, there might be an iceberg involved in it here. American taxpayers are getting a tax break. No, what? No. We are getting to the point where the servicing the debt is such a huge portion of the economy that it's a big problem. Like we may be the last opportunity for Congress to get its act together and get a real budget before like things get to the point where you can't save it anymore, you know? And so the Ukraine war and the Israel war, those are all both important kind of pieces of this, because those are both like huge expenses. Yeah, there you go. 4,000 contracts to make it go offer. But they do make it go offer, not a huge offer, but they do get it. Yeah, and then so there's maybe a little bit of pushback here. There's kind of some of these guys like saying that's going to hold this spot, but it continues to trade back and forth across that, so I think we're okay. Like, free movement across the price back and forth is great. lack of liquidity at an individual price, that's not particularly good. Pushback against the price, that's not particularly good. It coming down and like just all of the activity dying out, that's not particularly good either. So it trading back and forth across 31.5, I think, is actually probably a positive sign. Tax money goes to buying new weapons for U.S. military, not to Ukraine. USA sends the weapons from its stockpile, and those weapons are no longer in accounting. Oh, sure. I don't know if I don't know how you call that a tax break, though. I think what you're saying is that the US needed to decommission or get rid of those weapons anyways, so maybe it actually is a little bit cost saving. But if that's the case, then why do you need to put so much money into it, right? Or I would say you're saying now, and then they're just replenishing inventory that they would have anyways, right? But that would be like bringing forward demand, and I guarantee you that what happens is that then when we get to that point later on, where it should be like, oh, well, we don't need to spend the money on that because we already replenished our arsenal, then they will just take that money and spend it into something else. And so you're not actually saving money, right? That's the way they play it. It's just like when your wife goes to the store and she says like, oh, this shirt is $50 off. That means that I get to spend $50 more. Then you didn't actually save any money, did you? Yeah, you got more for your money, but you still spent the same amount, if not more. I don't know if I should have used that allegory, but I think it's a really good one. That's Jiwi. That's girl math you're using right there. We both know how that one goes. Okay, so I want to note that 30.5 was like a key high that I had at one point. That's kind of interesting. I don't think that it's really matters. I'm just going to delete it. We are coming back. This is like, we're coming close to 200-day moving average again. So there's a couple of things that are a little curious about this area. I'm still interested. Oh, no, we did breach it. Okay, so we breached the day's low. There's a lot of volume through that, though. I don't know. How much time do I got left here? Okay. So I think that I might need to think about getting out because I don't know if they're going to give me the opportunity to wait and see if it goes further. And I am still in a position where I'm not 100% sure what's driving things today. I would say that the central bank speakers were a little hawkish. So I think that might end what was this the Atlanta's wage growth tracker. That might have been a factor. So it may just be I get $10. Okay, I got filled. Right at a moment where I'm like, oh, maybe it's really going to go. Watch. Now that I'm out, now they're really going to go. There's going to be this stop run. It's going to be crazy. We're going to be like, oh my gosh, it could have been a $30 trade. Oh, this is what always happens, right? Well, probably better out early than out late, I say. Like ultimately for your account, it's better to get out early than it is to get out late, but it feels a lot worse when you get out early because then you get to watch it go without you, versus when you get out late, it's kind of like, well, I did things right. I could have gotten out at the right time. I didn't. Right? You feel a little bit better about it in your head, even though I don't think it's actually better for your account. My girl is an entrepreneur and owns a beauty spa, which she makes money off of other women. Is kind of painful when she spends on stupid things. I don't think that my wife has ever spent money on stupid things. Like, I don't think that. Okay, she'll get things like she'll go to the store and she'll buy food that I really don't think we should have. Like, I really don't think that we should have pop, soda, whatever you want to call it. I don't want my child, who may be autistic, to be addicted to soda and demand soda all his life, because the only thing I can think of that would be worse than a 20-year-old dependent autistic adult child is an autistic adult child that is also obese and has diabetes, right? So I don't think we should buy, but I don't think she's ever bought something that I really thought was like, she's not frivolous. You know what I mean? But I also don't think that she tracks it very well, right? Like, I try to be meticulous about it and track like every dollar, and I feel like she doesn't want to do that, because then she knows that she would have to be exert more discretion on what she's getting, and she doesn't want to do that. She just wants to do what she wants to do when whenever it feels good. My girl has more boots than there are. Oh my god. Dude, I've never heard that before. That's effing hilarious, man. You guys all the time will use things like, is that a colloquialism that's commonly known, or did you come up with that? Because I kind of want to steal it, except for that, my wife doesn't own lots of shoes, but I just think that was so clever. It's clever enough that I have to question if any of us would be smart enough to come up with the phrase that clever, I just came with that. Feel free to. Oh, okay. So I was like, that sounds like something that Mark Twain would come up with, because. Oh my gosh. Okay, you know what? They just ticked up another tick. So at least here within this short time frame, I read that really well in getting my exit. And the issue is that because we're pulling back here a little bit, and there's another tick back to 108. The opportunity for it to maybe come back down to lows and extend now is probably going to be outside of my time frame. So now it's really looking like I made almost the perfect exit. Almost a perfect exit. Obviously, I don't think that I would say that, well, I don't know, for what it was and how it went for me, I would say that the overall trade is an A, because I got in pretty good too. I don't think, let's see here, let's pull up our stats here. Oh, did it go? It says I had 9 ticks against me? No, really? Okay, if you say so. I didn't think that it went against me, but maybe it did. So maybe the entry wasn't that great. But, obviously, I missed a lot of action. Like, I really should have been going short, like, way before that. Because basically what happened was there was a first opportunity, and I wasn't aware of it at all. And then after I saw the volume came through, I kind of said, well, okay, this is what's going on. I think that they might extend a little bit further. And then I went for it. I don't think that in this instance that I had a super clear, like, flow. It was very speculative, but we still had a good idea of what was going on, and enough to know what was going on to know that, like, we could get a short, and I was still kind of looking for the shorts today. So I guess in the end I went along with, I came in today because I've been like, I don't know if my read on the daily action in the last week has been very effective. Right, I'll think, oh, it's down and it went up, and then I think it's going to go up and it goes down, and I'm just like, okay, I don't know. But today, I said, well, I think I'm still kind of leaning towards maybe short at some point. If it's not today, in the longer term, I think that they need to test those interest rates again. And today it worked, so okay. let us come back to Twitchers and the other places. I haven't really seen anything on Twitter in the last 30 minutes. It really is like there's less activity on Twitter. A lot of people have left Twitter, it's true. There's no real competition. I don't think that Threads is really ever going to threaten Twitter, but there was a lot of people that left Twitter. Oh boy, do you own any Bitcoin? Asks Jimmy Urio. 62% say no. That's interesting. I actually was kind of thought that maybe Jim's audience would be slightly pro Bitcoin. But I guess not, because they're all treasury traders, more serious traders that aren't going to be interested in, I don't know. Yeah, oh man, there really hasn't been. Okay, Chicago Fed President Austin Goolsbee says if the recent run-up in bond yields since earlier this summer is sustained, the Fed will have to be more watchful of the dangers of overshooting. And that's what he decided to highlight off of those speeches. I would say maybe slightly more hawkish than anticipated. But again, I'm not getting a whole lot on Twitter here. Let's check Zero Hedge. Oh my, oh my. White House aides simply cannot stomach Biden's Israel policy. Dissent memos leak, revolt at State Department. This is pertinent to my interests. I have to be totally honest with you guys. I'm a little bit triggered by this conflict in Israel. Maybe I'm triggered because the lefties are all triggered, and I kind of feel like the lefties are all triggered because they don't like Jews, but I could be wrong. What happened just I think about it every day and it makes me feel awful. It makes me feel so sick. The number of people that were killed, not just the number of people that were killed, but like how disgusting it was these guys were looking to make the most shocking, violent, humiliating deaths possible. It is just disgusting. In some respects, like don't get me wrong, the Holocaust, a lot of people died in the Holocaust. Okay, so from that respect, I'm not sure that you can really top the Holocaust, but I would hope that you can't top the Holocaust in the modern world, you know. And especially the industrialization of it all and everything. But they knew that what they were doing was wrong, and they kind of tried to hide it, right? Now you've got these people, and they also tried to do it in the most like I want to say like inhumane way. They tried to treat people like cattle, right? What's going on now is people that are as open and brazen about it as possible and are trying to do it in the most personal way possible, right? They don't want to just push people into rail carts and then eventually take them off to gas chambers. No, they're doing it by hand, cutting people up. I'm not even going to tell you the stories. It's just horrific, and it bothers me so much. And then I see Joe Biden coming out, and basically everything that Joe Biden is doing is, can you let's not do that. Let's have a ceasefire. Let's have this or that. Doesn't surprise me at all that some people in the State Department and the White House are now starting to say that they don't like the way that Biden is taking this. Yes. So revolt, and that's going to be that could be a significant story politically, but let's see. Because when your own cabinet starts turning on you, that's usually not a good sign for your presidency. That was kind of when, of course in Trump's presidency, there was always like somebody leaving, right? But it was like after he lost was when like everybody abandoned him and was like, I don't want anything to do with this, right? And that's when he really started to do dumb stuff. So on that note, we should talk about the debate. Did you guys see none of you said anything? Not even Uzi said anything about that there was a debate yesterday. So at the beginning of the debate yesterday, Vivek Ramaswamy came in and said all this stuff. That's getting a lot of airtime now afterwards. It's just like, I don't think that anybody would know that there was a debate yesterday if it wasn't for all the bombastic things that Vivek said yesterday. But I hate it. He is a fraud in my opinion. I think he's a complete fraud. And the thing that bothers me so much about it is that there is absolutely no critical thinking. Excuse me. It seems like nobody is really critically thinking about this and what he's saying. Because like one of the things that he did that everybody is applauding is like, oh, the head of the RNC should be resigning over what happened yesterday and the election on Tuesday or whatever. Yeah. Do you even know how that works, right? So they resigned. So now who's in charge? The vice president, right? You know that there's elections for this sort of a thing, right? Are you going to have an election and elect a new RNC chair before the next election? You know it's going to be the same members of the committee. You think that they're going to find somebody that's better, that really does things any differently? Because it's the same group of people in there that voted in the first person. This is not going to change anything. And can you actually like make significant enough changes a year ahead of an election? It kind of takes time to do those sorts of things. Does Vivek even know how, the caucus system works and they elect, their chair people to the national committee and how that organization even works? Like nobody's actually looking at because what he's saying is actually really quite stupid. I know it feels good, but it's actually, it's quite stupid. And the thing that just pisses me off about it is that like he gets up there and he says, the news media is trying to control the election. The news media is trying to influence the election and affect the outcome of the election. But then he ignores like, okay, but you know how they do that, right? One of the ways that they do that is they use people like you that will just come out and say whatever bombastic thing possible and give all of that the airtime, because that's what gets people to tune in and to watch the TV. And then you don't talk about policy and you don't actually go and find people that would actually like be good executives and be able to do good policy, right? It's basically like you're trying to push Republicans into what I would call the Hamas strategy, right? You're trying to turn the Republican strategy into the Hamas strategy, right? Just throw a bunch of bombs out at the other people and hope that they don't land on yourselves. It just doesn't work, guys. It just doesn't work. I would have hoped that since 2016 we would learn that. But apparently Vivek still gathers a lot of attention and people still like it, and so we have not learned a darn thing. So there's my political rant. You know what? I thought that was going to I went through that fast because I thought, I've only, that's going to take me 20 minutes and I'm going to go over. But that only took 5 minutes and I got through the whole thing. And now we have time to like either argue about it, which I don't know. None of you guys are saying anything. So maybe nobody cares about the Republican primaries. It's really what it comes to. We all know that Trump is going to win. Oh, that was the other thing that really bothered me about the debate last night. Was that, like, basically everybody on stage knew that there was no way they were going to win, except for Nikki Haley. Nikki Haley is the only one that's still delusional enough to think that she's going to beat Trump. And it was so off-putting, by the way. It was so off-putting that she was like that. Because she was, like, going after her opponents on, like, really trivial stuff. Like, one of the things was she went after Ron DeSantis because of opposition to fracking. Okay? She's like, well, you did oppose fracking. And he's like, well, we can use fracking and we should get oil. I just don't think that we should use fracking in the Florida Everglades. And she's like, but you did oppose fracking, and it's kind of like, you know what? Yeah, I agree with him too. I don't think that you should frack the Everglades. Like, it's just, and she's like going for blood here. It's like, God, Nikki, you're not gonna win. You're not gonna win. Stop! Don't embarrass yourself here. Embarrassing yourself trying to take down an opponent, and you're not gonna win. Good grief! It was so off-putting. So, like the first debate, I kind of thought, well, maybe if there is a viable candidate here, Nikki Haley might be it, but not if you're going to act like that. Good grief. And DeSantis, I thought DeSantis is the next president. At least that's what I thought 6 months ago. Yeah, well, so here's what happened with DeSantis. Here's what I think about DeSantis, is that everybody said DeSantis is one of the best leaders in the Republican Party, and why do we say that? Because he did a very Republican policy in Florida and was very popular and did very well with it. So Florida is doing better, and the state has become more Republican because of what he did as governor there in Florida. And so they say, well, if anybody knows how to do it, it's Ron DeSantis, right? Well, but the problem is that Ron DeSantis is using somebody else's playbook, essentially, right? He got it done using the pretty standard Republican playbook. And that playbook is not going to work at a national level. And the contrast between him and Trump ends up looking so bad for Ron DeSantis when you look at that, because Donald Trump, his big advantage, I think, is his ability to adapt, right? He looks at this situation and he makes his own decisions, and he tends to make pretty good decisions. And when he doesn't make good decisions, when things aren't going well, he will shift course. He will shift to whatever it is that he needs to do to get things to work again. Now, the disadvantage of him doing that is that in politics, that leaves you with lots of enemies. But it's a very business approach to things, right? So it's like, well, this person isn't getting the job done, fire them and hire somebody else. Cool. Yeah, you can do that in business. I don't know if you can do that in politics. But anyways, Ron DeSantis, he just doesn't have that ability to adapt. He just doesn't. And so when you watch him get up on stage, right, he's using the playbook, but it's not this. He's doing everything that you should do in a debate. He's doing everything that you should do in a presidential campaign, and it's falling flat. And it's because that's not the situation that we're in. We're in an odd situation where you have a semi-incumbent president you're running against. So what do you do then, right? And he's just floundering. And then the other thing that's killing him is his stage presence is just so awful, guys. It's so awful. Like, you thought that Mitt Romney was wooden. They said that Mitt Romney was wooden in debates. Man, it's Ron DeSantis just looks so awkward up there sometimes. The facial expressions that he makes and things is just, oof. And then on top of all of that, the thing that really kills it is he knows that he can't win. He knows at this point that there's basically zero chance that he is going to defeat Donald Trump in the primaries. Maybe he will be vice president, but he's not going to defeat Donald Trump in the primaries. I think that everybody has given up on that. And so there is just absolutely no heart in anything that he's doing up there, because he knows that it's pointless. It's almost sad to watch. And then, yeah, it looks like it hurts him to smile. I think it does hurt him to smile, because he's not happy about what's happening, right? If he was in the debates and Donald Trump wasn't in there, and he was the leading incumbent, and he's coming out and he's saying something, this is what I think, this is the place that I want to take America, and I'm going to win, and I'm going to make it happen, and I'm happy because I can see people responding to it, and my dream is happening, and then he would really smile, and then he would really be happy. But the truth is that he knows that none of that is going to happen, that Donald Trump is going to be the president again. It might not go so well. We'll see what happens if Donald Trump is president again, but it's not gonna be him, and so he can't smile. That's what's going on. That's what I think's going on. It's my theory. I'm not a mind reader, of course, but that's my theory. Semi-incumbent. It is. It's like, I mean, I guess we do have some president, because this is what happened with Theodore Roosevelt, right? Actually, so here's the funny thing about this one. Theodore Roosevelt lost when he ran, and then he quit. He let his vice president become president, and his vice president really sucked. So then he ran again, but he wasn't going to be the party nominee, so he ran as a third party. So there was the conservative, and then there was the bull moose guy, and then there was the liberal guy, right? and basically the liberal guy won, essentially, and that's how you got who was it? I don't even remember anymore, right? Okay. Well, kind of looks to me like you're getting a similar sort of a thing with Kennedy. You're getting a similar sort of a thing with Kennedy. So when Kennedy first kind of popped up, I kind of thought, well, this guy is crazy. I don't think that anybody would really take this guy seriously. But they are. They are. Or at least it appears that there's enough people that are taking him seriously that it could have an impact on the election. And from what I can see at the moment, it hurts Donald Trump more than it hurts Joe Biden. So when you look at all of the polling right now, there's been a lot of panic in the Democrat Party because over the past week, the polls have basically shown Donald Trump ahead of Joe Biden in like 4 out of the 5 battleground states that matter. So basically suggesting that if the election was held today, that Donald Trump would win because he's winning in the right spots, right? But these polls do not factor in Kennedy, whatever is what is his first name? Anyways, they don't factor in Kennedy, and when you start to factor in Kennedy, it actually turns out maybe Joe Biden wins. So there maybe is a little bit of a parallel there with Teddy Roosevelt. Yes, that's right, Robert Kennedy. Yes, Robert Kennedy Jr. or whatever. I'll leave Ron alone. He needs to stay here in Florida. Well, I do. I guess that's kind of the thing is that from what I've seen from him so far, it seems like you should keep him in the state. That he wouldn't actually be very effective on a national stage. But again, this is a larger problem, and I think that it's a problem that you're seeing across the Western world, but I think that it's becoming particularly acute in the Republican Party. Because the Republican Party has this element that is basically like anti-smart people sort of a thing, or it's anti-establishment. It's really anybody that's been in government for a while and understands how government works. They don't like them because they think that they're part of the system, right? And so the end result that you're getting is that anybody that would actually be a good president is not getting into politics. I don't think that I would make a good president, but I don't want to get into politics. I don't need somebody to go in and look at, use ChatGPT to look at every stream I've ever made and then try and take some comment that I've made out of context to try and hurt me in an election. Like, screw that. I don't have to put up with that crap. Anybody that's smart, they're just not getting into politics, and so your leaders suck now, right? Like, so who's left? It's narcissists and ideologues, and that's why you're having a hard time finding good leadership in the entire West. It's not just the United States, it's across all of Europe, because they're making super terrible decisions in Europe, right? Chris Christie is running on free donuts for everyone. Yeah, maybe. You know what? I'm glad that he's there. I think that he's kind of come into his own in the debates and that he's made good comments, but people don't like him. Yeah, he's probably not gonna win. I always kind of thought that Chris Christie would make a great vice president, but kind of didn't go that way. I think that ship has sailed. Can you imagine if Donald Trump asked Christie to be his vice president? Obviously, he wouldn't because they hate each other now. But oh my gosh, that would be so effing hilarious. Yeah, we do got to go. I got some systems. I think we fixed it yesterday. So let's see, the website is better this morning. So I get going today. What should we put in for today's title, though? I want to put that in. Yeah. Smart people don't want to be involved in politics, and they are sent because then you're sentenced to the rule of the stupid. Jeez. Well, and there's this other thing, which is like, social media is a mess, man. Like the media news cycle is just awful right now, and who wants to be at the whims of that? Like this thing, like that's what Vivek is saying. It's like, hey, we should be having this debate. It should be Elon Musk and Joe Rogan, and then we'd be doing great. Okay, cool. Yeah, pick two people that are really actually liberals and let them choose the trajectory of the Republican Party in the future. Great idea. This idea that like it's the whims of the media cycle that we should be playing into. Oh, screw that. I hate that. I hate that the world is like that right now. I want to get away from that. I want to get serious again. It was fun for a while, but I want to be serious now, you know? One of these days you'll forget to go to work. Yeah, I don't know. I don't think I have a good title for today. So I'm going to say... I don't know. Short scalps. Nah, I don't know. I don't know if I can even say that. There's nothing really stands out to me about today other than that freaking hilarious joke that Jiwi made. I don't think that I can put that in a title, so... Well, let's say something about the Republican debate. I'll just say Republican debate recap. Okay, I gotta go. I'll see you guys later. Stay excellent, team.